welcome back. What a nasty week that was. We're 1 week out from the previous video that I made for you, and we've got to talk about what happened this week with the S&P 500 down almost 10%, one of the worst weeks since the COVID crash era. And I want to give you a really quick and critical video update here, following on from some of the key things that I talked about last week. So we begin here at the quarterly. This is where we began in last week's video, and you can see that we have already here in just the first week of April lost that key 8-quarter EMA, and we are well on the way down towards potential invalidation of this count as labeled, which remember I said would occur if we lost 48.18 in the S&P 500. If we get only a week half as bad as this week next week, we will lose that, and then the probability suggests we are very, very likely in a cycle 2 bear market that could see price test certainly the 2022 bear market low, maybe even all the way down into the low 2000s on the S&P. And when we talk about the possibility of another 50% market crash from here, that has to get your attention. Now, I want to drill down into some details here on the weekly, because there is still the possibility, it might be low right now, but it's still out there, that we got on the S&P an A, B, C down to finish this primary 4. But remember, we cannot trade into the price high of primary 1 within a larger degree cycle 3 and have 4 break into that area. If it happens, I think we are seeing potentially a 5-wave impulse down. 1 to red 1, 2, 3, that could finish anywhere in this area. Say 48s to all the way down to 47, even towards the 200-week SMA at about 46.75. And then if we see a full complete 1, 2, 3, 4, 5 waves down, that pretty much sets it in, and then we're looking for that classic bear A, B, C down in cycle 2. Now, I want to offer one other, I think, low probability possibility if markets break 48.18 on the S&P, but they hold the high from July of 2023, which is at 46.07. It's possible 48.18 can break, but 46.07 holds, and because that is the price high of this blue or white 1 within a potential 3 that could move out here, that is one other possible wave count. Really what that does, again, for my work, is it provides just an extra level of validation to potentially what could be happening here in this bear market. So basically, what am I telling you? I'm telling you that markets have until maybe Tuesday at the close. So we're talking Tuesday, April 8th, 2025, at this close to nail this bottom, or I think we could be in for a lot of trouble heading through the rest of this year into early 2026. So wanted to get that critical update out to you. It was just a nasty, nasty week where you saw even every single tiny bounce attempt get sold. Certainly, we're in a nasty, nasty news and tape right here, and we've just got to be ready. But that's what I do. I give you the information so we can be ready, so you can decide and have a plan for what you might need to do. Certainly, we break the 4,800 and 4,600 levels on the S&P, and it's time for you to start making long-term preparations for caution. So do your best to have a good weekend. That was not a fun week at all, and we're hoping for a bullish stick save over the weekend, but we've got to be ready if it doesn't happen.